What can the most recent price movements in gold tell us about the next key levels to watch for? Joining us now is Jim Wyckoff, Senior Analyst at Kitco. Jim, welcome back. Thanks for being with me today.
Hello, David. Good to see you. It's been a while since I've been able to be on video with the Kitco readers.
It sure has. I'm sure our viewers have missed you. A lot has happened since you've been on last, but let's talk about the most recent movements from today and yesterday. What can you tell us about the most recent movements?
Well, David, I think the bottom line is that we've seen a lot of choppy trading action in the gold market recently, but overall prices are still trending higher. You've got a price uptrend in place on the daily chart, on the weekly chart, and on the monthly chart. That's pretty darn bullish from a technical perspective. So from an overall perspective, the path of least resistance for the gold market is going to continue to be sideways to higher until we get some kind of a technical clue to suggest otherwise, which we haven't seen.
And would you say that momentum is on the upside or the downside right now?
Yeah, the near-term momentum right now is kind of choppy and sideways, but here's what's important. On significant price weakness, you have seen buyers step in and support prices and push them higher. That's a signal in a uptrending market that there's still more room to run on the upside when traders step in to buy the dip. So I suspect that any price weakness we're going to experience in the near term is going to continue to be met by buying interest and perceived bargain hunting.
We've seen in the last month many instances where gold and stocks and the dollar all moved in the same direction, especially when stocks are heading down. What can you tell us about that? That's not something that typically happens.
Well, David, it's confounding. My take on that is that it's interesting. When we got into the COVID-19 pandemic scare and markets reaction initially, the gold market sold off. That's because there was so much fear and near panic in the marketplace that even the buyers of safe haven assets, including gold, were afraid to step up. Interestingly, once the stock market began to rebound, the confidence among the buyers in many markets came back, including the safe havens. So the gold market buyers stepped back in because they had the confidence to buy, even though the stock market was rising, knowing that there were very tough waters, very rough waters that lie ahead for the economy and for the human population. So that's why you saw the gold market rally at the same time the stock market did.
Since we last spoke, we've seen a huge influx of demand, especially for physical gold bars and bullions. And at the same time, we've seen mine closures all over the world due to the pandemic. So how do you think the fundamentals for the demand and supply are holding up now?
Well, they're pretty darn strong. I mean, gold prices are not that far below the recent 11-year high, or actually 7.5-year high. They're still not far below that level. I think you're probably going to push to new for the move highs in the gold market here in the coming weeks. We've still got some very, very tough times ahead for the global economy, and we're just starting to see some bad numbers show up in economic data that for the past 6 weeks.
That's a great point, Jim. And moving on to equity, since you brought that up, we're seeing a little bit of soft price movement this morning with stocks trading slightly down in the session. What can you tell us about recent price movements in the equities markets?
Well, again, I look at charts pretty closely, and the U.S. stock indexes are trending higher right now. In fact, the stock indexes late this week hit 7-week highs, suggesting sideways to higher price action. We've seen a bear market set in faster than at any other time in history, and we've seen prices recover at the fastest rate that we've seen in trading history. So the path of least resistance right now for the stock indexes is sideways to higher. I still don't think that's going to have a seriously negative impact on the gold market because, again, there's still so much uncertainty out there about how quickly the global economy is going to recover. Are we going to see a second wave of illnesses spread in the major countries. There's things we don't know like that that's going to continue to support the price of gold. Here's another interesting point, David. The major central banks of the world have been pumping so much liquidity, read that money, into the financial system that I can't help but believe that in the coming months or few years, we're going to see some serious price inflation that's going to develop. And, history tells us and trading analogies show that the gold market tends to fare pretty well during times of inflation.
Analysts have said that we might see deflation before we might see inflation. Is that a possibility? And if so, can we possibly see a dip in gold prices before we see a move up?
Well, you can argue that we're seeing deflation right now with crude oil prices last week trading way into negative territory. I'm talking about the NYMEX futures, and crude oil prices as we speak trading below $20 a barrel for West Texas Intermediate. You can argue that that's deflationary right now. We're probably also going to see some deflation in other parts of the raw commodity sector, like the grains, in international foods, because of the demand shock we've seen from the COVID-19 pandemic. I do think that's going to be temporary. And what have you seen gold do during this potentially deflationary short-term period? You've seen them trade at least sideways, if not sideways to higher. So it's really it's kind of a perfect storm for the gold market right now.
And what are the key levels you're looking for?
On the upside for gold, I believe 1788 and change is last month's high. That's going to be stiff overhead resistance. If we move above that level, we'll see a quick move to 18 and then above that. On the downside, you've got some solid chart support at 1700 and below that about 1775 and then 1750.
In the medium term, analysts have benchmarked the $2,000 an ounce level as sort of a target for the end of the year. I've seen both sides of the debate in terms of whether or not we'll reach that level by December. What do you think?
David, we're going to reach that level. I'm not sure we're going to do it this year. My bias is that we have a decent chance, but I wouldn't put strong odds on that. But importantly, if you look at the cyclicality of commodity markets, and including gold and silver, they tend to go through periods of boom and bust. And we are in a boom cycle right now in the gold market, and I believe silver is probably entering a boom cycle. And that's going to see prices move continually higher. I think you're going to see new all-time record highs in the gold market in the coming months, if not the coming few years. My bias would be the shorter time frame, but and that's no bold prediction. That's just an examination of markets history going back many decades.
In terms of appetite for safe haven assets like gold and silver, we've seen the reverse in the last few weeks. Like you said, gold has done well, but stocks have also seen a continuous rise since the beginning of April. So my question, Jim, is why do you think stocks keep going up during this time? Is it because of the Fed and monetary stimulus? And can we potentially see the stock markets just ignore fundamentals in the economy and just keep rallying?
That's a good point. And yes, we can see. I mean, the stock market's going to do what the stock market wants to do, and the markets are always right. Even though some people say that they're wrong, but the markets are always right. That's just a fact. That being said, yes, the influx of liquidity from the central banks has put more money, more cash in consumers' hands and investors' hands. They're going to look to be buyers of things they're comfortable with. Some people don't want to own hard assets. Some people would rather own stock. So yes, you're going to see, you could continue to see the stock market rally as well as the price of gold. My bias is that the stock market's probably due for a correction after this recent, solid rally. I look for the stock market to probably trade more in a sideways fashion in the coming weeks or longer. Whereas I think that gold prices are going to probably continue to trend sideways to higher.
And how do you see silver?
Silver is unique. Some days silver acts like a safe haven asset and follows the gold market. Some day it acts like an industrial metal and follows the raw commodity sector led by crude oil. So silver has had fits and starts, but But I think if gold continues to trend higher, it makes new for the move highs and even new record highs, I think you're going to see silver follow along. It's called the poor man's gold. So anytime that the gold market is trending higher, the silver market's going to tend to lean that way.
Final question for you, Jim. Can we see any downsides or headwinds for the stock markets in the near to medium term? Or can the Federal Reserve wipe out any bearish sentiment with continued quantitative easing?
Well, the answer is yes to all of those questions, David. We have big risks still ahead for the U.S. economy and for other major economies of the world. We don't know how this COVID-19 is going to play out. Is there going to be a resurgence of sickness later on in the fall? How fast can the U.S. and the European, how fast can their businesses reopen? Those are just big unknowns right now. We are going to start to see economic data show up in the U.S. and in Europe that's going to be really staggering to remind us how serious damage has been done to the global economy. So all those elements are going to work to keep trader and investor uncertainty very high, anxiety high. That's bullish for gold.
Thanks a lot, Jim, for being with me today and sharing your thoughts. I appreciate it.
You bet, David. Nice being with you.
And thank you for watching Kitco News. We'll have more for you, so stay tuned.